Hi everyone, welcome back to my channel. My name is Zion and I'm so excited because today we're gonna talk about student loans. Specifically, I'm gonna break down to you the types of student loans that are available to US students, graduate students, parents, etc. I am going to actually make this an entire series where I break down the types of student loan debt. And then I'm also gonna make a video that's talking about repayment plans and what that means, the different types of repayment plan that federal loans offer, private loans offer. And I'm going to also make a video that is showing you guys how much student loan debt I am in. Yes, that's correct, I'm in student loan debt. I just am about to graduate from Brown University and I'm gonna have to start paying off my student loan debt. So I thought that this could be a really fun opportunity to create almost a debt-free community and tell you guys to come on over and follow me along on my debt-free journey, and I can't wait to show you guys how I plan to become debt-free. So if this sounds like something you're interested in watching, then keep on watching. So there are two types of student loans that I'm gonna talk about today: federal student loans and private student loans. I'm gonna start off by breaking down the different types of federal student loans and breaking down the different types of private student loans, and then I'm gonna compare the two. So I'm gonna start off by talking about federal loans, which are funded by the federal government. There are four different types of federal loans. There are subsidized and unsubsidized loans. There's also parent plus loans and consolidation loan. I want to start off by breaking down the different types of federal loans. The first federal loan is direct Stratford loans, and they're comprised of direct subsidized loans and direct unsubsidized loans. Both of these loans are similar in the fact that you get a 6-month grace period after you graduate until you have to start making monthly payments on these loans. Also, you don't need a credit check in order to qualify for these loans. However, these loans both do differ in two main ways. The first one is how interest accrues on these loans, and the second one is the amount of funding you can get with these loans. With direct subsidized loans, the government actually pays that interest for you until you start having to make those monthly payments. So all throughout school, the government will pay the interest for you, and even during your 6-month grace period afterwards. However, this loan is very much based on financial need, and your school decides how much funding you're eligible for. You're either eligible for $5,500 up to $12,500 based on your year in school and overall financial need. If you don't qualify for direct subsidized loan, I would advise that you try to get a direct unsubsidized loan. With direct unsubsidized loans, you start accruing interest from the moment that loan is given to your school for you. So you're accruing interest all throughout school and even during that 6-month grace period where you don't have to start making mandatory payments on your loan. Additionally, you're only eligible for $7,500 a year. The next federal loan that I want to talk about is the direct plus loan, or also known as the direct parent plus loan. These loans are available to graduate students, professional students, and parents of dependent undergraduate students. Unlike the direct Stratford loans, there is no grace period to pay back this loan. In fact, you have to actually start paying it back the moment that it's issued to your school. Also, eligibility is based on a credit check. Lastly, on top of an interest rate, it also has something called origination fee, which is around roughly 4.2%. The next federal student loan that I want to talk about is the direct consolidation loan, and that's when you combine multiple student loans into a single student loan. Why would you want to do this? Well, you might have the opportunity of taking a student loan that has a higher interest rate than another student loan and combining them together and paying that entire loan back at a lower interest rate. In turn, you can save money. Now, while that sounds like a great option, there are some stipulations surrounding the direct consolidation loan, which I will go into more in the next video. The next federal loan that I want to talk about is a loan that's actually no longer available, and that's the federal Perkins Loan, which was actually discontinued in September of 2017. This loan is different from all the other federal student loans because it actually was issued only to undergraduate students who demonstrated extremely high financial need. And unlike the direct Stratford loans, it actually has a 9-month grace period to repay the loan instead of a 6-month grace period. The interesting fact about this one is that it was only provided by some schools because schools actually funded part of the loan and the federal government funded the other part of the loan. It has a fixed interest of 5%, which is considered relatively low. Unlike other federal student loans, you actually don't pay back a loan officer with the Perkins Loan. You actually repay your school. So once again, repayment plans are different for the Perkins Loan. I'll be sure to go over that into more detail in my next video. If you have a federal student loan right now, chances are that they're issued by one of two loan programs. The first loan program is the Federal Direct Loan Program, and the second loan program is the Federal Family Education Loan Program. The Federal Family Education Loan Program was actually a part of the 1965 U.S. Higher Education Act, which had private lenders providing federally guaranteed student loans to students and parents. And then on July 1st, 2010, the Federal Direct Loan Program was introduced. And the Federal Direct Loan Program has loans that are funded by the U.S. Treasury. The biggest difference between the loans in each of these two programs is that the Federal Family Education Loan Program has loans that do not have the word direct in front of them, whereas loans issued under the Federal Direct Loan Program have the word direct in front of them. Now, once again, these loans don't really differ in overall structure, but they do differ in repayment plan options and also the different programs that you can use to get loan forgiveness. I'll be sure to go into this more in the next video. Next, I want to talk about private loans. Private loans are different than federal student loans in the fact that federal government doesn't fund them. In fact, banks or financial institutions like credit unions fund private loans. Additionally, private loans differ from federal loans in that you can actually get private loans for more than just your traditional undergrad or professional grad degree. You can get private loans for things like bar exams, international student loans, or also loans for students with poor credit. With that said, I would advise you to get a federal student loan over a private loan if you could. This is because federal loans actually offer a lot more perks than private loans. For example, federal student loans actually offer loan forgiveness, especially for public service workers and also if the borrower dies, whereas private student loans very rarely offer loan forgiveness. Additionally, the interest rate for federal student loans is set by Congress each year, whereas private student loans actually have variable interest rates depending on your year in school, your age, your credit score. And as a result, these variable interest rates can end up being very high, a lot higher than federal student loans. Lastly, federal student loans offer repayment plans that are tied to income, whereas private loans very rarely have repayment plans that are tied to income. In addition to private loans, there's also refinance loans. But refinance loans actually gets into your repayment options and how you can manipulate your loans into paying a lower rate. And so I'm gonna get into this more in the next video. So for today, that's all. I really hope you guys enjoyed this video. Comment down below if you have any student loans. What type of student loans do you have? Do you have Stratford loans, direct Stratford loans, or do you have a Perkins loan? What student loans do you have, if any? And let me know what you're doing to repay your student loans. All right, as always, don't forget to like and subscribe. See you guys next time.